So in Canada, we have a sales tax called GST, which stands for Goods and Services Tax, and it is a federal tax and it's a value added tax. So it's being charged across Canada regardless of the province or territory. And now in this video, I'm not going to get into detail on GST and how it works and when to set up an account and things like that. I'm going to focus on GST Input Tax Credits, or ITCs. Now, I'm sure everyone in Canada is familiar with GST. You know that you pay it on certain products, certain services to businesses. But if you're starting your own business, then typically, at least at some point, you need to register for a GST account, and then you need to charge it to your customers and your clients on the sale of products and or services, depending on the industry and the product or service. There are some where you actually don't have to charge it. But now with GST input tax credits, they are very important to understand because in some cases, you might actually get a refund by claiming them. And then in other cases, you're just having to pay forward less GST if you have a business and you're collecting GST on sales. So when you're at the point where you have to register for GST and start collecting it, you do have to pay forward that GST to the Canada Revenue Agency. However, with GST input tax credits, they are credits that apply to the amount that you collected so that you have to pay less forward. So let's say, for example, in a reporting period, you collected $1,000 in GST from sales to customers and clients, but you had $500 in credits, then you only have to pay forward the difference, which is $500 total instead of $1,000 total. And so how do you get these credits and how do you actually claim them? Well, the GST input tax credits come from you spending GST on purchases for your business. So let's say, for example, you're renting a commercial space for your business and you're paying, $50 or $25 per month in GST on that commercial rent. Or you're paying for some software where you're paying, maybe $5 or $10 per month on GST. And then maybe you're purchasing supplies like, notepads and a computer mouse and, USB hard drives and things like that. Typically, you're going to be paying GST on those items. And now if those purchases are actually for business use, then you get to claim the GST you paid as GST input tax credits. So just to offer a more detailed example, let's say in your GST reporting period, you had $10,000 in sales, and let's say you were registered for GST and you had to charge it on all sales, then 5%, which is what the GST rate is, on $10,000 is $500. So you would have collected $500 from sales from your customers or clients. And now with that $500, you're supposed to pay that forward when you have to file your GST. However, if you were paying GST on rent and supplies and software and things like that, and let's say in total for that reporting period, you had to pay $200. So you collected $500, but you paid $200. Then when you file your GST, you report both. You report that you collected $500, but that you had $200 in GST input tax credits. And now you only have to remit the difference of $300. So you can see why this would be very important. And I'm sure some businesses aren't even aware of this and they're not claiming it. Why would you pay $500 if you're only supposed to pay $300? Now it's important to note that you're only supposed to actually charge GST if you have a GST account set up. And there are cases where businesses are supposed to be charging it and they don't realize it and they've never registered for an account. But there is a threshold in which you are supposed to register for GST and start charging it. And now to add to that, you're only supposed to claim GST input tax credits if you're actually a GST registrant. So if you're not a GST registrant and you're still paying GST, you don't claim that GST as GST input tax credits. You just clump that in with your business expense and claim it as part of the expense on the tax return for the business. Now, in the case that you have some expenses that are, half business, half personal, or some other split, like say, for example, you're self-employed, you have your own little business and you're using your phone in part for business. And let's say that your phone usage is 50-50. It's half personal, half business, and you're paying GST on it. Well, if you're paying, let's say $3 per month in GST, you don't claim the whole $3 as a GST input tax credit because only half of that expense is actually for business. So in that case, you just claim half of the GST, which is $1.50, as a GST input tax credit for your business. And the other $1.50, you don't claim that anywhere. You're just paying that as a personal expense, just as if you were paying for, gas for personal driving or vehicle insurance for personal driving or, groceries just for, personal consumption. So hopefully this all made sense and was useful. If so, please click like and feel free to check out my YouTube channel here and subscribe. I currently have over 285 videos that cover business management and business startup topics.